going on, guys? So I have a few stocks here that I want to break down for you. The market was a bloodbath last week. We all know that. It was selling off pretty aggressively. We have some really good deals awaiting us tomorrow, so let's get right into it. So first one I'm going to be starting with is Tesla, of course. So I drew a couple support and resistance levels here. Let me just clear this for you. Some levels that I'm looking at where the buyers were definitely in control, really inflection areas where there was a fight between buyers and sellers, and then the sellers won or the buyers won. So the sellers were definitely in control here at that 500 area previously. So 500 looks pretty good to me as a dream buy. So if it pulls in the 500 and gets a little bit below it, pulls back above and holds that 500, I'm definitely going to load up on Tesla, looking for it to at least come back to that 650, 700 area. So I know 700 was definitely a pretty strong resistance before. I remember having trouble with it up there at 700 a couple weeks ago, and actually right around this which was I believe 2 weeks ago or a week ago. It had trouble holding above that 700, and then it eventually broke down below and had a pretty strong sell-off the past few days. This is the 1 year, 1 day chart. So Tesla dream buy would be 500 for me. It already capitulated at that 540 area, so 540 is definitely going to be support. Maybe buy some at 540 and buy the rest of your shares at 500, or anticipate that 500 area to buy the rest of your shares. But 540 was really the start of what I'm seeing as a possible wedge formation. So we got these resistance levels here, kind of descending resistance levels here. What I'm anticipating is for a bounce, to come back up, make a lower high, come back into support, and then start to wedge right around this general area, and get bought and sold for maybe a couple weeks, few weeks, maybe a month or two, until it really compresses. And when it compresses like it did over here, it forms that wedge pattern. So there was a strong drive right here, strong drive. It hits the 500. That's going to be it's going to be a really significant psychological level pretty much on any stock is 500. So pulls back in 35%, kind of bounces, makes a lower high, comes back into that ascending support area, and then it starts to really compress here and wedge in that wedge formation. That's really what I'm anticipating here, is a huge wedge for a long-term hold. But for right now, I'm going to be looking for a buy into the 540 or the 500 area, and I'm going to be holding that to previous supports that could be resistance, which is still about 32% return. This is that area that I'm looking at as the longer term resistance here, which is I guess 800. If it gets above that 800 inflection, it can move to 900, but I think it's going to spend a little bit more time up there at that 900 before it breaks. So plain and simple, looking at 540 for an entry, dream buy 500 for a hold up to that previous support area right here, which could turn into resistance and make that lower high that we're anticipating, just like over here. And I'd probably load off on some shares here, buy some more back into the support, or if it makes a higher low, and then starts to make maybe an ascending triangle pattern. We don't know what's going to happen. We can't predict what's going to happen. All we can do is be ready for something to happen and know what we're looking for. So 500, 540 support, 700 resistance, kind of like an inflection there. So then we also have the 800. Let's go into NEO, very similar to Tesla, electric vehicle company. I drew some support lines here. So 40 has been an inflection point. Buyers were in control here. It got bought, pushed up, got bought, pushed up, got bought, pushed up, got bought, pushed up right around that 40 level here. So when it broke below here, I was like, well, it broke below that 40. It's holding below, but if it reclaims that 40 level and holds, and the buyers step in and they reclaim control, then we can definitely see it move right back into between this little consolidation area between 40 and 50. And then if we can really hold and move higher, then we can maybe see 60. But I think that we're going to have to see a little bit of consolidation here, maybe just the same as Tesla. I'm anticipating a wedge pattern to form, maybe come up, make a lower high, maybe come back into 40, or consolidate a little bit here, and then but we're looking for that. That's what we're anticipating, is that wedge formation. The only thing that scares me is that it broke below, and I'm not going to touch it until it breaks back above 40 and holds. And we're looking at about a 30% return on that one. Tesla from our first support to our first resistance is 540 to 706 is also 30%. So, and you're risking about what, 40 bucks, 40 to 160. So what is that? About a 1 to 4, I believe. What? Hold on. That is a 160. Yeah, it's like a 1 to 4. So not too bad there. 1 to 4 risk return ratio is what I'm thinking there. You know, you're risking 40 bucks to make possible 160 on a share. So back to Neo. So we got the 40 support for reclaims and holds. We might see a move back to 50 psychological level. You know, and then we also have that resistance at 60. So moving on to Apple. Apple is a stock that everybody knows. We're right around that SMA line, 180-day, pulled back about 30%, I believe. Yeah, 27%. Last time it pulled back 27% was over here, and it was about 33%. Kind of like a measured move. You could kind of use that as a measured move. Look for it to pull back. You know, if it pulls back 30% and reclaims, doesn't move back below that previous support, like you can see here, it pulled back 30%, bounced, made a higher low, and then just continued its uptrend. Pulls back 30%, bounces a little bit, makes a higher low, and then we're anticipating follow through there. So 120 is definitely a huge inflection point. Couldn't get above there, couldn't hold above there. When it got above, it really got bought above it. So 120, if it holds that 120, definitely going to be loading up there for at least a hold to our that 130 inflection here, where it had a hard time getting above. When it did, it got hit pretty hard at that 140, and then once it got above over here, it really held and started to move up. So if it holds that 120, pushes up, holds that 130, we can definitely see 138. And that's about a 15% return on Apple there. So we also have TQs, which is very similar to Apple. It's an overall NASDAQ ETF. Just like Apple, pulled back around 30% here. And it started to move up. Pulled back, like 30% here, 28%, and started to move up. Pulled back, 30% here, 33%? What is it? I think it's 33. Like 30%, almost 30% on the dot. And we're anticipating follow through back to its previous resistance. It might take a little bit longer. Apple does take a little bit longer. But I mean, TQQQ actually does take a little bit longer, as well as Apple and the overall NASDAQ market, all those tech stocks, Microsoft, things like that. But 80 is definitely a good area. We can see that it didn't get above 80, didn't get above 80, didn't get above 80, and when it did, it pushed up above 80, came back, pulled into 80, did not get below it. So we're risking right there about $2 on that. So if it holds that 80 area, we're risking about $2 for a possible measured move back 30%, which is $25. So that is about a 1 to 12.5 risk reward ratio. So that's really great. Good thing about TQs is something that I like is that it's a little bit more, I guess, risky than trading Apple or trading like QQQ or something like that. It's a 3 times leveraged ETF. So it moves 3 times as much as the overall NASDAQ does. So if the NASDAQ moves 1%, TQQQ moves 3%. So you can definitely take advantage of that dip on the NASDAQ market through TQQQ. So 80 we're looking at as support on TQs. We're looking for it to break above 85 and hold. And then the previous resistance where we're going to be looking at to sell a little bit of our shares, maybe then reloading back up if it pulls back in at that 100 psychological level. So we got that. We got Shopify. Definitely drew a few areas where the sellers were in control here, sellers were in control here, sellers were in control here. You can see that it sold off, sold off, sold off. right around that 1076 to 1151 area. So and then the buyers were in control right around here, that 855. Buyers were in control around that 880. You know, around 855 to 880. It gets bought, pushes up, gets bought, pushes up. So right around that SMA line. The 180-day SMA line is the screen line that we see here. It kind of like it used it as a support here, kind of respected it as a little bit of support, didn't leak through it. This time it leaked through it, but we have a huge capitulation candle here that broke below these previous supports at 1076, and then it reclaimed pretty quickly all in one day, and you can definitely see that it got bought there right around that area. So if we see a flush back into that 1076 area, I'd definitely pick it up there. Looking to sell into like 1254, previous resistance, it got sold, you know, 1254, 1335, got sold, and then a big sell-off. So from that 1076 area to our first resistance of 1254 is about a 17.96% return. To 1335, it's about 25% return. Shopify is a great name as well. It's a well-known company, multi-billion-dollar company, I believe. Who knows? It doesn't really matter. It's a great deal. But anyways, then we also have GM. Going back to the vehicles, this one's been holding up pretty well. They had some pretty good news back here, saying that by 34 they were going to be selling primarily electronic vehicles. I believe that's what I read, and it really got bought up there. It really got bought on that news catalyst, and it's holding really, really well. It got above that 50 psychological level, pull back in. That's the start of a wedge pattern. You can see that I drew the wedge pattern here, but we're consolidating between about 50 and 55. We can get a huge surge of volume or a nice catalyst that breaks this thing out above the 55 area. We could definitely be looking at all-time highs. But if it pulls into 50, again, which we could anticipate it making a lower high here, pulling into 50, and then consolidating, just like I said on Tesla, like consolidating, coming in, and then getting really tight around here, and then volume comes in and it breaks to the upside. So that's what I'm anticipating on GM. So looking at 50 to buy. If it pulls back in, right now it's a little overbought. If it breaks that 55, I might be looking for a follow through, past its all-time highs. If it can be backed by a significant news catalyst or by high buying volume. So, and we would see the volume here. They tried to break it out here. You can see that they tried to break it out there on high buying volume after it came off of this support area, that 50 before, made that lower high at 55. So it's definitely a fight going on between buyers and sellers here. And once it wedges and gets really tight, somebody's got to win. I mean, it could go down this way, if it breaks to the downside, and our risk would be, what, a couple bucks, what, $2, I believe, to make, $5. So it's what, it's like a 1 to 10, or like 2 to 10, 1.5 to 10. So that's not bad. 10% returns. The $53 stock right now. Be looking to pick it up around $50. So you get a couple thousand shares and do pretty decent on that one. So I believe that's all of them. I hope you guys enjoyed. I hope you guys saw some levels that you liked in here, and I hope that I gave you at least an idea of what I'm looking at, and hopefully it can help you make some money this week. So, all right, guys, just be careful. Keep your risk tight. We never know what's going to happen. We can make an informed decision on, or an informed, I guess, prediction on what's going to happen, but it doesn't have to go according to plan. It doesn't have to go in our favor. Just always remember that the stock does not have to go in your favor. So be diligent and cut your losses. If you're getting uncomfortable with the amount that you're losing, definitely set a stop loss on any trade, and you don't want to lose more than you're willing to lose. It can put you in a really bad mental state, and you get discouraged. You don't want to trade anymore. But if you keep your risk tight, trading is a numbers game, and eventually those big wins are going to take place and outweigh your small losses if you're diligent about keeping them tiny. So I hope you guys enjoyed. I hope you learned something. Let me know in the comments what you thought. Next Sunday, I'm also going to be breaking down some stocks. Hopefully, we can get a couple people, to give some input on some stocks that they're looking at as well. So, thank you, and